Thank you for everyone's support. This content video will talk about the ticker PAYC and why I see potential in this stock. Now, before we get started, I just want to tell you that there is a current course I'm developing, stock course, as well as stock talks on my YouTube channel every Monday to Friday, which talks about next day's market movement and potential stocks to look forward to. Let's get started on PAYC, Paycom Software Incorporated, on the 180-day chart using the Think or Swim platform. First thing, I really like this trend. You can see that Paycom has been on an uptrend. Number two, we have a very predictable trend. The predictable trend is shown by the red line, the 200 SMA line, which shows that every time we hit the 200 SMA, we have bounced up. 200 SMA, bounced up, 200 SMA. Well, so one thing to keep in mind is always have some humility as a trader, right? Yes, it's bounced up, but it doesn't mean that it will bounce up every time. The trend can also break. So let's take a look at a couple of things. We talked about this ticker a couple days ago, right? Actually, 2 days ago in our stock talk, or yesterday maybe? We talked about this ticker 1 or 2 days ago because we realized it hit the 200 SMA and that we could potentially see a bounce up. And for those of you who got into this ticker, I know some of you did because you guys commented on my channel, fantastic job, and you guys caught on to the traction of a 2% boost. That's fantastic. Now, a couple things to keep in mind. Today, the markets did extremely well, so part of this catalyst or push up could be due to the markets going up as well. Now, ask yourself, are we going to get into an entry position right now at this point? So, yes, no, you guys can think of an answer. Okay, so the answer is no, we're not. Now, I'll tell you why. There's a couple of things to keep in mind. We had earnings came up and we had a significant drop due to earnings, right? Now, we dropped to the 200 SMA where we found support, but because we dropped so much and because I feel like this partial uptrend is kind of pushed up by the markets today, we might see a rejection of the 20 EMA line shown by this light blue line. Note that in this previous trends, it came down significantly, tested the 20 EMA line, got rejected, did a double bottom, retested the 200 SMA, and then what happened? We found a nice reversal candle day over here, and this was the start of the uptrend. So what am I looking for right now? So you guys can see that people bought in, if people bought in around this area, right, when it was pulling up from the 200 SMA, why did they buy in at this area? Well, it's because if you bought in at this area or this area, you know that you can set your stop loss very quick. What does that mean? If you were to lose money, you lose a little bit. Let's say 3%, right? You lose 3%. But if you get your pattern correct, you have possibly a 10% or more margin of profit. That is more than a 3-to-1 or 1-to-3 risk to reward ratio, which is what we want to go for. We want our losses to be quick if we are wrong, but if we are right, we want our profits to be higher than our losses for sure. So why don't we take a trade right now? We're at the 20 EMA line. I want to see a rejection of the 20 EMA line, come back down and reconfirm the 200 SMA as a support, take a position there, then write it up. This is the most safe bet in terms of taking a trade. What do I mean? This is what I'm seeing. Doesn't mean it'll come down next day. It might come down in the next few days. But this, if it does this, this is what I want to see. This is where I would take my position. Now, for people who already entered into a PAYC position during this day, they're really comfortable, right? They're really comfortable because even if it gets rejected at the 20 EMA and starts falling and they're wrong and it breaks this previous low, they're wrong, but they lose very little money. That's what we want to see. So this is the most comfortable position. Of course, we're on an uptrend. Now I'm going to ask you this question. Am I going to be sad if it does something like this? And I could see it do something like that as well. No, I'm not going to be sad. That means for people who got in at this area, they got in very nicely. And at that point, when would I take a position? Ask yourself if it did something like that. Well, we're looking for a continual bounce off the 20 EMA line, right? So if it starts going up, it's going to have to retest the 20 EMA line at some point. You can imagine when it starts trending up, look, retest of the 20 EMA, comes down, retest of the 20 EMA, retest of the 20 EMA before it starts going up. That's where we can get a good entry position at that point. So what's the most probable scenario? I do want to see it come down before it coming up. But if I do see it come up, then I want to see it bounce off the 20 EMA. So that is my trading analysis for this ticker. Guys, I hope you like this video. I hope this helps with your trading practices in terms of your entry and exit points. And yeah, if you like this video, look for more content videos in the future. Happy trading, and I hope to see you guys all in the next video. See you later.